Good morning. What an exciting Black Friday. Thanksgiving yesterday. We are seeing markets crashing. Apparently, there is a new COVID variant. Welcome to another Daily Markets Watch. It is November 26th, Friday, Black Friday, following Thanksgiving. And today we're going to have a quick look in the prices of oil. What's going on with Dow Jones and also gold. As I was saying, a new variant has flooded the media outlets, headlines everywhere that this is very dangerous, and it's believed to be coming from Southern Africa, and it's the problem with it is believed that it can spread much more quickly than the Delta variant. So this is posing a very big risk for the markets. Risk is down. Safe havens are up. Okay. So what does this mean? This means that gold is currently seeing a very good move to the upside. It means that Dow Jones is falling. It means that oil is falling. Oil has done a very big dip as well, around, what was it, 3% or so. So let's go and get started with gold first, guys. Yeah. Although gold has indeed crossed below a level that we weren't really looking forward to, well, for those at least who are a bit more bullish, like myself, we have managed to stay within this channel. This is biased to the upside rather than anything else. So what does this mean going forward? First of all, the fact that we keep doing higher lows, it's an indication of an upside market. Okay, short to medium term, at least. What we want to do is draw a Fibonacci over from the top to the bottom, because the market is falling from that level up here, right? And we do have our downside wave. What we want to see is gold moving through 1800s, 1816, 1828. This is our level for perhaps a day, maybe even Monday, who knows. But I'm looking at this to actually do a good move to the upside even today. I know the fact that we return back with the channel can be seen as bearish move, but for now, guys, I want you to see that we have a divergence on the RSI, divergence on the MACD histogram, and on the MACD momentum on the EMAs. Okay, and we are looking at the 4-hour. We're not looking for something that is like supposed to be, very short term. So 1816, 1828. If we break 1828, that might also give us some more confidence that this is likely to move higher again, and that might be considered as a false break, which means it could continue higher. But if it does continue higher, since we've broken back within this level over here, I don't see this now as a progressive move to the upside as I was before, maybe in the short to medium term, but then I see more downside. Unfortunately or fortunately, this is what it is. This is what the chart tells me, and this is what I told you. Okay, so let's get to 1828 and take it from there. And then, of course, 1833 is going to be an important level. Obviously, we have to remain above certain levels, right? We cannot just, tell that, okay, yeah, we're going to go up and that's it. No, we need to stay, we prefer to stay above 1794. Okay, because that looks like as a progressive move to me. It looks like this is the first move to the upside. We're going to get the second one, then perhaps a small pullback intraday, and then we're going to get the third one. So another level to pay attention to would be the 1812. Okay, and we also prefer to draw a trend line over here, just in case we see that turning a little bit lower, and below 1794, although it's not going to be a good signal. Holding above this trend line at least might save the day, in few words. Now let's jump on Dow Jones, which we haven't seen actually. We looked at the S&P the other day, and we said it had minimum space to the upside. It looked like it. Well, this is obviously, these are very correlated markets anyway. So you can see here as well that we've had a very impressive signal, okay, for a long time, both on the MACD and on the RSI. Now, usually what happens when we do see reversals at this stage, it can be short term or just pullbacks. Usually what happens the moment we interfere with a lower, with a lower zone, like for example below 35.26 over here, usually what happens is we get all the way down to where that starts, okay, and that might be down to 33.53, which is an important level, and it's a long way to go from where we are now. Obviously, we want to also, let me just take you a little bit closer here. We want to also ensure that we are breaking these levels consequently or subsequently, or to at least that we break them for us to consider more downside, right? For now, it looks like we are seeing support for now, okay, at 35, which is a very strong psychological level, okay? Seeing this does not necessarily mean we're going to hold, but it means that we might see a very short-term bounce. So what we want to do is we want to see how strong this level is. Is anything else there? And look, you can see at this that this is also the 50 Fibonacci retracement. So if we do manage to stay above that level, we can expect prices to move a little bit higher in the short term. But as long as we remain below this previous swing low, which happens to also be the 38% of this Fibonacci retracement that we just pulled over here, if we remain below that level, then very likely to continue with this move down rather than continue higher up. So a good idea would be to draw a channel over here, since this remains kind of descending, and also assume a potential move to the upside, could stop around, by finding resistance on this channel. Another channel we can equally also draw is one that is a bit more accelerating at the moment, that might fit our scenario a bit better, because we are in a decelerating market that it's actually going down quite fast. So let's see if we remain outside this level, okay, and if we do, that it's again going to be a bearish sign rather than anything else. Once 50 gives in, we go to 34.61 next, and then 34.16. okay, so that's all there is for that one. And oil, I've left this trend line over this channel over here from last time. I'm gonna go and draw a trend line also here as well, because now with this territory being revisited, and you remember we talked about that like maybe last week, right? That the moment we enter here, then the risk for more downside increases. But I was expecting a bit more upside, but again, we did have our levels here to look. We always have levels, guys. If something, if a trend line is not, it's giving us trouble, it means that, we need to consider the potential repercussions of this trend line. What does it do? Why is it there? How long is it likely to last, to this firm, to keep this firmness? How many times prices bounced at that level? Because this is also very important. So currently, we're going to do a similar approach, and as always, you do know that I love the Fibonacci's. I want you to see this. 38 is exactly where we were at the break over here, and if you just let me remind you, look at this. This is exactly the same level we were over here, okay, 38.2, and that was the previous high, okay. You see that over here, 38.2, right? Exactly the same thing. Obviously, this is a bit of a different situation here. We have already done that, right? And we're moving lower. By entering this territory, though, you see what happens. So now the 50 Fibonacci retracement is at 73.40, and the 73.40 is a very important level for now, okay? Because if that breaks, then the bias is going to change to the downside, okay? Now, we don't see any signals here that are telling us that there might be some sort of move to the upside. There is some sort of divergence here, bullish divergence, but it's a very short term. So maybe that bounce is not going to last. Maybe that bounce is going to take us perhaps a little bit higher. But as long as we are outside, let's say the 75, 70 zone or so, 60, that is more likely to move lower rather than higher. But as we did with the Dow Jones as well, it might be a good idea, because this is decelerating, to use a channel that really shows the deceleration of the trend rather than anything else. So for that, we're going to do this. And what I want to do now is provide a medium level for this particular level. And I'm going to do this by moving that, by moving that right in the middle over here. Okay, so you can see that this level for now is holding prices, okay, but it could break. And if it breaks, it can go down like through it, pierce it, and then move up for a retracement and continue. Or, you know, it might start decelerating slowly and keep bouncing over here until it finds some good support level. But for now, 73.40 is our level or to the downside, and 76 like 34 is our level to the upside, with of course the downside being a bit more possible than the downside. The 1 hour, it's ready. I mean, this divergence over here has already broken, and the MACD is also ready to show us that the relationship is going to break soon. But just for the scalpers, because there seems to be some buying pressure here. Now I'll be looking at 76, perhaps even 76.63, but 76.63 would be the top for even today's intraday market, unless if of course something drastically changes. Okay, so I want to, guys, thank you very much for watching for one more week, because it's Friday today. I want to wish you a festive day in season for those who celebrate. And as always, do not forget that you can leave your comments, and in case you have any questions, and I will get back to you. Trade safe and take care.